Good afternoon, everyone. Happy Wednesday. It is the 12th day of February 2025. Um, um, you put your limit or market order. Your broker is Ninja. Hang on, Joel. I'll answer all your questions in a few minutes. Okay. Let me just get into what we're doing right here first. Okay. Feel free to ask questions. So I encourage the questions. Okay. Um, Here we go. Good afternoon, everybody. Today, as I said already, is Wednesday, the 12th day of February 2025. Um, I don't have a ton of stuff that I want to go over today, but I do have some things that I want to go over that we sort of covered. I've been trying to organizing it into a usable fashion in the last 2 months for you. And I think I've got it in a pretty good way that it'll be usable for you guys. Now, what I plan to do today, I'm going to take some trades, using the stuff that I do in the morning session, like all those big numbers that you see me getting every day. It's using this stuff right here. Like right now, there's a long here on the Russell. It's too late to get into it, but it would have been the open of this bar right here would have gone long. It's too late to get into it right now, though. Same thing over here on gold, but it's too late to get into it. But when I do take trades, Joel, when I do take trades, it'll be like this right here on the ES. I have StoneX as my broker. Okay, StoneX is my broker. I don't use Ninja. And when I drop an order right here, I drop it right here. If I drop it right here, it's going to fill it the best ask. It's going to fill right here. Okay, if I drop it right there, that's usually how I do it. If I'm in a position to get a better entry than the open, like in this case right here, where the blue went up into the overbought by itself, you should have sold. I should have sold the open of that bar right there. It's too late to get into it now, but that's what I would be doing, right? And when I do have an opportunity to trade, that's what I will do. Like right here on this one, where the blue got down there by itself, I should have bought the open of that bar right there. All right, and over here where the blue got down here by itself, I should have bought the open of this bar right here. Now that one would have stopped out probably. This one would have been in profit. This one would have been in profit, and those are the trades that triggered just now in the last 10 minutes. Okay, so when I put the order on, I always put limit orders on. They're always limit orders on. Okay, and my broker is not Ninja. All right. So the stuff down here at the bottom. Now the thing that I've been working on with you guys for a while. What did I title this? Reducing stops and what was it called? Reducing stops and identifying trends. Okay. Well, the stuff that I've been doing kind of works into both of those things. Reducing stops is number one thing, and identifying trends. What I've done in the past, like let's just look at the ES today. Okay, this is the ES on the 7-tick range. When it's in this kind of a mode right here, where it's going sideways at the oversold or sideways in the overbought, that means the market is trending. All right. When it's trending like that, the divergence trades that I use don't work out that way. You need to use trending trades, and it's an easy transition. It's an easy switch to make from one to the other. But if you don't want to make that switch, like right here, right now, if you don't want to make that switch, then you can just do the divergence trades. You can do the divergence trades with the trend. If you don't want to do counter trend trades, you can just do divergence trades with the trend, and you can do divergence trades two different ways. Okay, like the ES has a trade, and I'm not sure. Let me just check that. So I think the black line went down there with the blue, so that's not an actual trade right there. If the blue were down there by itself, and we can go in here and shut it off just to see. If the blue were down there by itself, it's not. You see the black line is there, but if the blue were down there by itself, then that would have been a trade. I put it on anyway, but here it is. I'm going to throw my stop at break even. I thought it was a trade a minute ago. I couldn't see the black out or anything. So my stop's at break even on this. But what I was trying to do was eliminate this, right? Eliminate these flat spots. Because the flat spots is when it starts trending. And when it starts trending, if you're in a counter trend trade, when it starts trending, it's going to stop you out every time. So for the trigger trades, for this one right here, do you want to see what these settings are? This is what I have. I have the password is in here, okay? And I have the div area as a line, and I have my snipe is all blue. So it looks just like I do it in the morning. Okay, Wayne? Just like I do it in the morning. All right. Now, the optimized one down here, you guys don't have that yet. That's one that I'm working on. So what I was explaining to you, what I'm trying to do, what I've been trying to do is eliminate the flat spots. right? So you're not going to see flat spots in the overbought or flat spots in the oversold anymore, because I think the flat spots are useful information, but they're not useful when you're in the overbought or when you're in the oversold. It's not useful information. By the time you get that information, it's too late, right? So what I did was I moved that information to the middle. You see that? I moved it down here to the middle. I shifted it around a little bit and I moved it to the middle. But you see, when the flat spot began there, it began there, and it continued. And when the flat spot began here, it was already in the middle there. But I moved the flat spots to the middle. I changed them around a little bit because I am working on an entry technique now that is really, really easy. And it doesn't really involve overbought or oversold. It involves the flat spots. Okay, you see what I mean? For those of you guys who are in here who have taken the trial in the past, or who are already subscribers, this is not new information to you that I've been working on this. For those of you guys who are new in here, you know, everything that I do, all the stuff that you've seen, all the numbers that you've seen, if you've come in here because of the YouTube stuff or anything like that, you know, what did that say? Not that one. There's another one. This one. This was one day last week, I think, or maybe it was earlier this week. It might have been Monday. I think that was Monday. We made more than that today. But I think we made more than that today. Yeah, we did a little bit more, 12,600 today. Those numbers come from this type of trade right here, and this is off the TV Trades range trigger. Okay, what I'm looking for is for the blue line to get into the overbought by itself or to get into the oversold by itself. When it gets into the overbought by itself, I sell the open of the next bar. When it gets into the oversold by itself, I buy the open of the next bar. That's it. That's all I do, again and again and again and again and again and again and again. Now, that kind of stuff, that divergence, that separation between the black and the blue like that, works great when the markets are choppy, like this right here, when the markets are choppy. But when they start to trend like this, it doesn't work as well. All right? So, there's a couple of ways to deal with that. All right? One is to identify the trend. Just put your TV trades on here like this, and the background color is going to identify the trend for you. When it's blue, if you want, you can just take long trades. If you're going to do it that way, if you're just going to take long trades, then you don't really need to have the black line in this. Okay, you can take that part off. You don't really need that. And there's two ways you can do the long trades. You can do it when it goes into the oversold, or you can do it when it comes out of the oversold. All right, if you wait till it comes out of the oversold, you're going to miss a whole bar length, but you're not going to have to worry about the flat spots. All right, if you do it when it goes into the oversold, you're going to have a much better entry, and you have to use price action to determine what to expect out of the trade. When it comes out of the oversold, you have to look to the prior swing high, because that's where price should be going, all right, to determine your risk reward and all that. Now, speaking of risk reward, I use range bars, and because I use range bars, everything is all predetermined when it comes to risk reward. All right, I recommend everybody use range bars all the time. I'll leave this up here for just a minute. When you guys watch the video after the fact, you can stop here and take a screenshot of this. These right here, these are the different size range bars. Now, it doesn't matter what market you put that range bar on. Like, this is the ES on a 7 range. On a 7 range, the stop is 10 ticks, and it goes to break even after 4 ticks in profit with a 30 tick target. Now, that's what it's like on a 7 range, but watch. If I go to a 19 range on the ES, now the stop has a 25, it has a 25 tick stop that goes to break even after 10 ticks in profit with a 45 tick target. Nothing else changes. All the rules are the same. When it goes down into the oversold like that, you're going to buy it. You're going to buy the open of the next bar. All right? If it goes down by itself. Let me put the div area back on. If it goes down into the oversold by itself or into the overbought by itself, that's when you're going to trade. None of that changes. Okay? None of that changes. It's all the same. All that changes is the amount of trades that you're going to have, because that was something I think Joe G. Can I speak louder? No, you got to turn up your speaker. This is my good headset. I just moved my microphone a little closer to my mouth. Hopefully that's going to help you. But Joel G. You said it looks like too many trades. If it's too many trades for you, then all you have to do is increase your time frame. It's going to reduce the number of trades dramatically. When I say trail to break even, is this just to move to break even, or is there an actual trailing stop with some number of ticks? When I say move to break even, I mean move it to break even, whatever your entry was. Okay. So if you have a 10 tick stop and you get to 4 ticks in profit, move your stop up 10 ticks to break even. So your stop is at 0. Okay. All right. Thanks, Chris, and everyone else that said it wasn't me. It wasn't me with the volume issue. I didn't think so. This is my good headset. I do have, I have another headset that doesn't, it is not as good as this one, and this is my good one. I mean, all my headsets are the same exact kind, but some of them are not as good as the other ones for some reason. But anyway, back to the subject matter here. So, what I wanted to do was reduce the flat spots. Okay, there's a few things I want to go into. I want to minimize this first so we can see if we have any trades setting up. There was one right here. We already identified that one. There was just one here on gold. It's too late to get into it. It was right here. We could have sold the open of that bar right there. Now with gold on a 9 tick range, with anything on a 9 tick range, if it goes 5 ticks into profit and you did not get filled, you didn't get into the trade, it's too late. Cancel your order, okay? Because if you wait for it to come back after it's already gone 5 or 6 ticks and you wait for it to come back and fill you, it's already done the minimum of what it should do. So you should be getting out of the trade, not getting into the trade at that point. Okay, let me bring that back over and explain that again a little slower for you. It's a 9 tick range. It has a 15 tick stop. That trails to break even after 5 ticks in profit. So in this particular trade right here, the entry point should have been right here. Now it's possible you could have gotten in higher than that, but the entry point should have been right there. From wherever you entered, if you got 5 ticks in profit, and this went from here at 0.8 down here to 0.2, so it went 6 ticks into profit from the proper entry point. It could have gone more if you got in up here. It could have gone more. But either way, it went 6 ticks into profit. So if you got in at the right spot, you would have moved your stop to break even. If you didn't get in there, if you didn't get any entry at all on the trade and you're not in the trade at all, then you should not try to get in the trade after it's done that much movement. All right? Because it's already done what it should do. If you try to get in after it did that and you tried to get in here, you should have been getting out there. If you were already in, you should have had your stop at break even. You should be getting out, not getting in. All right, it's important that you understand that because risk management is like the key to longevity when you're trading futures. When you're trading anything really, risk management is the key. And if you don't have a risk management strategy that you can and do follow all the time, then you might as well not have you might as well not trade. No, Mark. Mark, your question, you're asking, do I trail the stop even more after that? Is probably what you're getting at, right? You didn't ask that directly, but you said, so I trail it to break even. Do I just leave it there at break even, or do I trail it after that? I think that's what you're asking. I do trail it after that. All right. Now let me explain. Let me show you first a couple of things. We don't have any trades here right now, right? No. Okay. Let me show you a couple of things. Like this trade right here, for instance. Right here. Your entry point should have been right here. Now, you would have moved your stop to break even. This is the Russell, a 19 range. So you would have moved your stop to break even after you got 10 ticks in profit, right? So after it moved up to about here, you would have moved your stop to break even. Now, what you anticipate out of this trade, the minimum that you anticipate is that it's going to get right here, okay? That it's going to get right there. So you could leave it at break even until you get another, until you get another 5 or 10 ticks. Then I'd lock in 10 ticks, and I'd let it get up to here. And when it gets up here, that's where it's likely to meet its first area of resistance when it gets up there. So I trail my stop pretty close at that point. Okay, and if it breaks through there, then I'll leave my stop alone and let it run. Because, let me show you why. Yes, back to 7 range. Oh yeah, let me put that back to 7 range. Thanks, Michael. The reason you wanna let that run is because this is what it should do. All right. Let me expand on this. The S almost gave us a trade right here. Almost. It didn't go down below there. It stopped right at it. But let me expand this and I'll show you what I mean. All right. Now, I say this all the time. You guys, anybody that's followed me for over the years, you know that the market's always doing the same thing, right? They're going up and down and up. And then eventually they're going to go down and exceed that low, or they're going to stop going up. So right here, it exceeded that low. And then this right here, to continue the trend, it would have to go back up above that. But it didn't. It went here. So this was a trend change that happened right here, right? So What's happened right here is it's gone down, and the minimum that we should expect it to do is get up above that level. All right. And if it does get up above that level, it should do it right around here. And if it does get up above that level, this is your price element. It should go that price element on top of that level in this amount of time from here to here. It's a thing I call the diamond principle. I coined that term. It should go this far. Once it breaks up above there, it should go that far. And however many minutes or bars it takes for it to go from here to here and exceed that level, that's how much more time it should take to get to this level over here. All right. That's what you should expect out of a trade. So in this trade right here, if we would have gotten in it, I would have moved my stop to break even after 10 ticks in profit, and then I would have locked in probably 10 ticks when it got up here a little bit further. So I would have gotten out with 10 ticks on that one. That's the way I typically trade in the morning. All right. And you got to have a risk management strategy that you do and can follow all the time, that you're comfortable following, that you have no problem if you stop out a couple of times, you're just ready to go right back at it and follow the same exact strategy. If you change your risk management strategy, then you have no risk management strategy. Okay, if you're not committed to what you're doing every time you put a trade on, then you're not committed to what you're doing. You got to have, some people call it a trading plan. You got to have a plan for every trade that you put on, and the plan should be the same. The only way you're going to get consistent results is with consistent actions, and so you have to have a plan. And for me, it's easier for me to have the same exact plan, no matter what the market is, no matter what way you're trading, up, down. Is set up to, Chris, you presume my DOM is set up these OCO stops and targets. You never used a DOM before. Okay, yeah, setting up the DOM was kind of fun because this is a new DOM for me. The DOM that I had used for over the past 10 years, for like the past 15 or 18 years, was discontinued 2 weeks ago. And so this is a new one, but I made this one look just like the old one and act just like the old one. All the mouse clicks and everything are just like the old one. Like right here, if I right click on this, I can do all these things right here just by right clicking. All right, and the old one had a whole bunch of buttons on it, so I would have a button to press, but now just right click it in there and I have all the same stuff. And this one is actually a little bit better in some senses because the other one, when it put the stop on with the bracket, like, if I throw a bracket on this, what is this? Okay, if I throw a bracket on this, it's got my stop way down here and my target way up here. Now, my other one used to put the stop, it slid it a lot. Almost every time it would slide the stop so it wouldn't be exactly right. This keeps the stop exactly right all the time. And yes, if I put a trade on here, Chris, if I throw a trade on here and I move it around, then everything moves around with it. And if I cancel it, then everything cancels with it. And if I close it, everything closes with it. So yes, to answer your question, I have my DOM set to OCO and all that stuff. And I don't trade off the chart. I know some of you guys do, but I can't do that. Does DOM put the bracket on for you when you enter? Yes, it does. I set it up that way, Mark. And I actually in my Telegram channel, hang on, let me find it. TV Trades Telegram channel. I put all this stuff out there for you guys. I'm trying to find the channel. Here it is. Here it is. Okay, this is what the DOM used to look like. Here, oops, I was trying to blow it up so you could see it a little bit better. I think I can bring that over here. Here it is. This is what it used to look like, and that's the one that just got discontinued 2 weeks ago. I used that for over 10 years, and this is the new one. So all the mouse clicks are the same, but you see this one had all these buttons up here. I now can do that with the right mouse click right here in the gray area. I get all those same functions just by right mouse clicking. And and so yeah, Mark, all this stuff is out here in the Telegram channel. Okay, let me slide this back over. It's in this Telegram channel right here. This is a public channel, so everybody's got access to this one. All right, and these are all the files right here that you need. Those are the files for the brackets, the preset brackets that I use. All right, and these right here are, I don't know what those are, but you need all those files. This is my workbook, my chart book is what they call it in Sierra Charts. All right, and this is a video about how to put it all together. So it's all out there in this Telegram channel. And if you guys want to join that, if you're not already part of it, I can give you that. Manage channel, invite links, copy link, done. Done. I can give you all that link in here right now, I think. Hang on. Here's the link to join that channel if you want to. Okay. Alright, so let me go back here for a second. If you use NinjaTrader, can you enter using the ATM bracket, or do you need the DOM? You can enter however you want with NinjaTrader. You know, I have a lot of guys that use NinjaTrader, and you know, they use whatever they use on theirs. You know, they have. Well, let me show you. I think I have NinjaTrader open right here. Okay, here's NinjaTrader. I have it open. Okay, so let me show you Ninja DOM. Here's Ninja DOM. Hang on, it's over here on this monitor. Here it is. Now this is a demo account right here, right? I don't have, well, I do have a live Ninja account, but I don't trade in it. But this is what the DOM looks like, right, on Ninja. And this down here is my 10 by 40 bracket that I created. So you can create a bracket and put it on here, and whatever you, like, let's do a smaller one so you can see both of them. We'll do it 8 by 16. Oh, those are points. I'll just do a 10 tick stop. Okay, so I'll throw a trade on right here.
Order filled.
Just so I'm in, my stop is 10 ticks away. Should be 10 ticks away. I think that's 10, right? I'm in there. Yeah, that's 10 ticks away. So my stop is 10 ticks away. And that's automatic on Ninja, right? I have it all set up so it automatically happens for you, for me. So you can do this if you want to. You can trade it this way if you want to. You know, you don't need to use, I don't have my stuff on Ninja Charts, and I'm not going to put it on Ninja Charts. But if you have NinjaTrader for your broker, then that is fine. You can trade here. Not two computers. I mean, I don't, you know, I take the trades, I take the trades off of the TradingView charts, but StoneX, you know, I don't connect directly to my StoneX account from these charts, right? All this stuff that you're seeing over here, this is actually a third-party platform. This is Sierra, which is a third-party charting platform, or it's a third-party charting platform, really, that I use through StoneX because I don't like the CQG DOM that StoneX provides for free. So I pay for this, so I can use this and execute my trades at StoneX. And I only have 2 monitors. So I have this one, and I have one over here on the other side that's got all my DOMs and everything else on it. Okay, that's how I do it, Mark. I have 2 Marks asking questions. So, Mark, it's funny, you both have the same last initial too. So yeah, to get that. Now, did we have any trades trigger here? There's just about a trade here on the Russell, but you see right here, the diamond principle that I just drew for you is just about to break through the top part of it, and then what it should do is probably retrace 50% down here, and then make another leg up to there. That's probably what it should do, and probably what it will do. We don't really have a trade set up for it. The blue led into the overbought just a little bit. I mean, I could sell it right there. It's not really the best looking trade because it's a tiny retracement that it's going to do. But that's something I guess I should probably explain what I mean about that. I drew it for you a few minutes ago. But, you know, when the market's going up and it's coming down, it's going up and it's coming down, it's going up and down and all that. In the past, what we had done and what I said earlier, I know I'm talking fast, I should slow down, but I always run out of time. And what I said earlier was, if you want to trade with the trend and you put the TV trades on, you're trading long when you have a blue background, you're trading short when you have a red background. The different ways that you can trade are with the trend when you go into the oversold, or with the trend when you come out of the oversold. Okay, if it's blue, you trade with the trend going in or with the trend coming out. Going in is going to be a little more risk, but you're going to get in a lot earlier. And if you are just going in there to get your goal for the day and get out, you know, be done when you get your goal for the day, then you're probably more likely to get it right away by going when it goes in. All right. If you wait for it to come out, that still works. It works great. You know, this thing that I have here, this goes back to January 2nd of 2013. Everything in this spreadsheet, yes, TradingView, that's right. Everything in this spreadsheet that you see from January 13 up to January of 2022. Actually, well, up to January of 2025, sorry, 2025 is going with the trend only. It's going with the trend only. From January 13 up to January of 2025 is going with the trend only. The January of 20 2013 up to January of 2022 is using a different charting platform. We started using TradingView in 2022. All right, so all the stuff that we have here is only on TradingView now. Okay, so I spent about a half an hour going over this stuff. Now I wanted to show you one more thing about this. You know, you can trade, if it's blue like this, you can trade when it goes into the oversold, so you would have bought the open of that bar, or you can wait till it comes out of the oversold. That's what some people like to do. And in that case, you would be going long right here at the open of this bar. Okay, so going into the oversold, you're long right there. Coming out of the oversold, you're long right there. You would have missed this whole bar length right here so far. Now, the more aggressive way, but the more profitable way, is going into the oversold. All right, that's what I do. Those big numbers that you see on YouTube and all that stuff, that's what I do. And I know some of you guys are in here for the first time, and most of you guys have seen me trade live, and you know I want to trade live right now, but we just don't have anything to trade. Well, that Russell, did I enter that Russell trade? No, I didn't. It didn't fill me. See, my order's right there. Now, if it went down here to 6.2, I don't know if it did. If it went down to 6.2, then I would take my order off. It hasn't gone down to 6.2. The optimal entry point would have been here at 67.5 though, and it has gone 10 ticks in that. So I'm going to take my order off on that. It didn't fill me. I tried to get filled, and it didn't fill me. Okay, so I'm going to cancel that order. Gone. Nothing else is given to trade yet, but over here on the NQ, we're about to get a trade here on the NQ. If we get an up close on this bar, I will sell the open of the next bar. Okay, on the NQ. I'm going to leave that open here so we can look at it a little bit. Now, what I was telling you about on this, what I was talking about on this, you know, just a minute ago I was saying about the diamond principle, and it's got to exceed this level right here to identify, to really create the time element that you need, and it hasn't done that yet. All right, so if I would have sold up here when it went into the overbought by itself, if I would have gotten filled and sold up there, I'd have my stop at my stop would be a break even, and I'd probably be starting to lock in profit. All right, that was one of the questions that one of the marks asked earlier. So right now, you see how the black led into the overbought here? That is not a trade. I'm not going to do that. What do you do if it goes down by itself? What do you do if it goes down by itself? If it goes down and you don't get filled, you just cancel the order. Okay, but every trade has a stop on it. Every single trade has a stop on it. That was part of the risk management. This risk management right here. All right, every trade has a stop. So if it goes against you, you stop out. My first two trades this morning were stop outs. This did not have an up close. It closed down, so we're not going to have a trade there yet. My first two trades this morning were stop outs. I stopped out on the ES minus 10 ticks, and I stopped out on gold minus 15 ticks. My first two trades of the day today. Okay. In the NQ right now, my blue and black are both oversold. In my NQ, these two right here, what I was looking for on this one right here, Mark, was for the blue to get up into the overbought by itself. That's what I was looking for on the NQ. This is the NQ. Okay, this is the ES. They're both oversold there on the ES. This is the Russell, and only the black is oversold on the Russell. And on the gold, they're both overbought right now. Okay, I think you mixed up the NQ and the ES, probably. Okay, you do need separation. For this divergence trade setup, you do need to have separation. We did have the separation there on the NQ. Right here on the ES, though, there's no separation. There is separation right here on the Russell. So if we would have taken that short at the open of that bar right there, it would be up about 25 ticks right now. Okay. It would be counter-trend trade, I think. With the divergence trades, it doesn't matter. The trend doesn't matter so much. Okay, but there has to be separation. If you're doing this trade setup, yes, there has to be separation between the two. So these are separated, but that's no good. The blue has to lead. Okay, the blue has to lead. From today's trades, I don't know exactly what my win rate was, but I had 30... How many trades did I have? 35 trades, and I think I stopped out 5 times. In 35 trades. Something like that. The safest trades be with the trend and with the separation is that's limiting. And my first 2 trades were stop outs, Chris. um, but wait, I didn't tell you guys this. I didn't show this to you yet. If you haven't taken a trial with us and you want to go here to tvtrades.com, just tvtrades.com, and click on the orange button. Any one of those orange buttons all the way down is going to be down to the bottom. There is a free 3-day trial. It's $25 a week after the trial, or $90 a month, or $9.97 a year. The annual one is the biggest discount. The monthly is still a pretty big discount. I say 10% here, but it's actually 18%. And the weekly plan is $25 a week. So, I mean, $25 a week is nothing when you think about in the scheme of things. It is nothing. All right, so the black led down here into the oversold is not going to be a trade there. There was a question, I think, would the safest trades be with the trend and with the separation, or is that too limiting? Mark, there are so many trades with this thing. So many trades. You could do the most conservative limiting trade would be probably, let's show it here on gold, because gold, even though the last couple of days gold has been really active and we've been able to trade a lot of gold, if you're going with the trend, so you have a red background, so you're only taking shorts, and then you're only taking it, the most conservative would be when it comes out of the overbought. Okay, so there'd be one right there, one right there, one right there, and one right there, and one right there, and one right there, one right there. Now, in this case here, you would get rid of the black line. Okay, you don't need the black line in here. You just need the blue line. So one right there, and that's all you would be doing. Every one of those trades won. Every one of those trades. And there are just so many opportunities, and I missed a ton of trades. This isn't the workspace or the layout that I use in the morning. I use these markets, but the one in the morning, I marked up all the trades that I missed, and there were a ton of them that I missed. A ton of them. All right, yeah. Well, Chris, she was 103. I really wish I could have gotten up there. How to set up the trigger like it is right now. This one right here. Yeah. I showed it at the beginning, Larry, but I'll show you again. Wayne had asked for the same thing. Okay. You put in your password on the other side, and then I have the div area as a line and the snipe as a line, and I have the snipe, all the colors are blue. Okay, because the colors are distracting to me sometimes. So I wanted to set it up just like it is in the morning. All right, the colors just help you see what's actually in front of you. You already see, if you're paying attention to what's going on right here in front of you, and the colors of the bar colors just actually help you with that information. Okay, so you don't really need all that. But, and 90 and minus 90 on that. And over here, just all that stuff. Okay. Now, again, let me just show you how to take the trial, because I forgot to do this at the beginning. If you haven't taken a trial, go to tvtrades.com, and any of the orange buttons up here is going to bring you down to the same place, right down here at the bottom. It's kind of neat the way it moves it down like that. This is what you do to take the trial. Click on that, or that. All right. You don't have to have charts to take the trial. If you don't have charts, you still get signals. The signals are generated in the trade table like this. All right, you get access to the trade table, or you get access to other Telegram channels. I'll show you the other Telegram channels. Hang on, let me bring that back over. Okay, so today there were 104 of those generated. That was not just today, but 35 of those generated, 11 of those generated, and 7 of those generated. You guys don't have access to those channels yet. This is an NQ only channel, and this is a swing trade channel, I think, or maybe, yeah, this is a swing trade channel. But you do have access to this, the futures, and what it gives you in here is the range that it's generated. It's gold generated from a 10 range. It gives you the current price with a target and a stop. All right. So if you don't have charts, or if you have some other charting platform, you can still get the signals. You just got to go here to Telegram channels to get them. And this is future signals, and this one is this has stocks. You see it does a whole bunch of stocks and does ETFs in Google, Meta, Tesla, the SPY, Netflix. This is the Russell and QQQ. So it does all kinds of things in here. You get access to all that too. You get access to all of it when you take the trial. All right, so you can check it all out if you want. And those other channels, I'm getting those channels ready. But how to use Ninja and TradingView without two computers? I use NinjaTrader, TradingView, DT Pro. I I have all kinds of things going. Mark, you can have more than one platform running at a time. Are the stock trades all day trades, or do I use bigger ranges to swing trades? It says it right in it what they are. Let me go there and we'll just go look at some. Trades.com. Go to the trade table. Okay. Hopefully I got the right password in there. I do not. Hang on. Oops, that's the wrong password. That should be the right password. Nope. Alright, well. Anyway, in the trade table, it's going to give you all the same stuff. Hey, look at that. Those you guys like to do those, what are they called? Prop firms. There's one right there, and there's one right there. Funded guys. Hang on, let me go back to the Telegram channel, because all the stuff that's in the trade table page is in the Telegram channel too. As a matter of fact, there's more in the Telegram channel gets it real time. The trade table page, you have to hit refresh. When you need separation and when not, you always need separation. Joel. Using this trade setup, using the divergence trade setup like this, you always need to have separation. Now it's 3:37. I want to get into this because this was the good stuff down here. But when you're doing the divergence trades, you always need to have separation. All right. If you're doing the divergence trades. If you're doing the trend trades where I took out the black line, you see when I took the black line out of here, you don't need to have separation because you don't even have the black line. But in that case, you're looking for it to come out of the overbought or go into the overbought with the trend. Okay, so let me say that again. I probably said it too fast. If you don't have the black line on, then obviously you're not looking for separation. In that case, you need to have the right color background. So blue is for long trades, red is for short trades. In that case, you can buy the open of the next bar when price goes into the oversold, like that. If it goes down into the oversold, you'd buy the open of the next bar. Or, if you want to be more conservative, wait until it comes out of the oversold and buy the open of the next bar. Right? These are range bars, so every bar, you see how there's no color behind this bar? That's because they don't do intrabar updates with range bars. All right? So when you see a bar like this that is closed and it's got the color and it's got the movement, oops, whoa, I don't know what happened there. It's got the color and it's got the movement of the bar. Waiting for it all to come back. You see it's struggling to bring it back up right here. And it's got the color and it's got the movement of the bar. That's final. It doesn't change. The bar is closed and all that is done. It doesn't do any intra-bar updates. All right. Joel, did you get that? So we still don't have a trade setup, but here's one right here. I can go on this one right here on the ES. Okay, so I just went long on the ES. Here it is. Okay, so my stop is 10 ticks away, and right now, when it goes 4 ticks into profit, when it gets up to right here at 72.75, I'll want my stop to break even. All right. I went long because this went into the oversold by itself. It has not gone 4 ticks into profit from the proper entry point. I actually got a better entry point because the entry point here would have been 71.75 and I'm into 71.25. So right now, right there, stop goes to break even. Now, right there where it hit that number right there, that's $500 for me with 10 contracts on. That's $500. So those numbers that I put out all the time, those are real numbers. That's $500. If I lock that in right now, it'd be $500. It should go up further than that. In the chop that it's in right here, see the chop that it's in right here? This is good. Chop is good when you're doing the divergence trades, right? I am going to lock in that $500 now. But chop is good when you're in the divergence trades like this, okay? Because you want it to go from the bottom to the top of the chop. So we just got out with 500. But you want to go from the bottom to the top of the chop. And that's a good thing. Okay? That is a good thing. So that, Joel. Joel, you're the one that's out on YouTube asking me if it's live, right? And there you had it. That was a live trade right there in front of you. Real money. $500. Bam. Just like that. Why are there sometimes two bars between the green and yellow and purple? Between the yellow arrow and purple arrow, if we were supposed to enter on the open of the next bar. The yellow arrow, when you're talking about these arrows right here, talking about those arrows, well, first of all, the blue and the red arrows only happen at the beginning of a trend, or at the color change. The blue and the red arrows only happen at the color change. Okay? And the yellow arrows say next trade could be, the next bar could be the trigger. It doesn't say it's going to be the trigger. Okay, you're talking about that's the sniper is what you're talking about. All right, you're talking about this space in between here. This is not always going to be the next one. Mark, okay? It's not always going to be on the next one. Other things have to happen to make that purple bar trigger. Okay. The yellow ones are also inside the TV trades. They're in here, right here. It's a trigger alert notice. And if you actually go and look at the alerts, and that's something I kind of wanted to get into today, but I'm running out of time. If you go in here and you look at the alerts, and you grab, let's do it on, well, TV trades. Okay, right here within TV trades, you can choose the different alerts that you have in here. And that is a trigger long potential and a trigger short potential. That's the yellow arrows right there. Okay. It's not an actual thing. On the DOM, do I place my order on the line that is the opening of the appropriate bar? So how do I have a better entry? Okay, I don't always. What I did in that particular case, let me bring over, that's not the right DOM, but let me bring over the right DOM. Alright, it was on the ES, so let's bring the ES back up and I'll show you the ES really quick. I'm running out of time, guys. I really want to get some other stuff to show you here. See, this one didn't end up going and doing what I wanted to do, so I'm happy that I trailed my stop up and locked in those 4 ticks. Now, it had moved down from the proper entry point, okay? When it hit this right here, that was the proper entry point. Whatever it was right in there was the proper entry point. And it moved down from there. It was right here, I think. Yeah, it was this bar right here. That was the proper entry point, was right there, but it moved down from there. When it moved down, I saw that it moved down, and all I had to do was click on the green right here. Just click on that green. And that's going to put me in right there where the yellow is. Wherever that yellow is, wherever the bid is on the yellow, is where it's going to put me in the best bid. Alright, it's going to put me in at the best bid. Okay, that's how I ended up getting a better entry, because the yellow was below the open of the bar. That's how I ended up getting it. Now, if it had not gone down, it had gone up, but not gone up 4 ticks, then I would have put my order on right there at that spot. I would have put a limit order right there at that spot at 71.25. Okay, Mark? So most of the time you're gonna get a chance to get a better entry most of the time. And all I have to do is click in the green. It's going to put me in better, or exactly where I want to be, or better, just by clicking in the green. Okay. And if I want to go short, I just click in the red, and it's going to put me in at or better where I want to be. That's the way I have the DOM set up. Okay, and again, you can have these DOMs. If you get Sierra chart, you can have these DOMs. I'll give you all the stuff for that. I have it all created. It's all out there on the Telegram channel. All you have to do is go get it. Alright, so back to what I started saying. We had one trade. We managed to get off one trade so far. But back to what I started to say. Let's go back to here and see if we got any more trades about to trigger. Right here, well, we don't know if that's a trade. I'm gonna put the other one back on there and see. No, it's not. The black's up there with it. Are these new updated charts? The only thing that you don't have is this stuff down here. Other than that, you have everything else. Alright, and I'm about to talk about these things down here. Okay. I think I answered everybody's questions so far, right? If I didn't answer your question, then just type it in again and I'll try to get it answered. I'm running out of time here. We only have 15 minutes left, so I really want to get into this. This is what I wanted to show you. When I said you don't want to miss this, this is what I was talking about. Now, we have, am I live somewhere every morning? I am live somewhere every morning. Every day. For almost the past 20 years. As a matter of fact, next week is going to be the first, not next week, next month is going to be the first time I actually take a vacation from that in like 15 years. Alright, So the flat spots. Now I'm not talking about the flat spots with the black line, all right? I'm talking about the flat spots with the snipe or the blue line only. This, like if you went short right here and it starts going flat like that, there's a good chance you're going to stop out on that. If you went short right here, you might have gotten your stop to break even on this move right here, or you might have stopped out to the tick right there. So what I wanted to do was eliminate the flat spots. Okay, eliminate the flat spots on the top and on the bottom, because that's where people get stopped out. I get stopped out. This is how I make a living. Trading is how I make a living. All right, so it's important to me to not have stop outs. Today, I mean, it doesn't bother me so much when I do. Like today, I stopped out the first two trades. I stopped out on the ES and I stopped out on gold. And that sucks, but I got it right back. In the first 20 minutes or something like that, 28 minutes, 26 minutes, I got it back and I got my goal for the day. But to get rid of the flat spots, what I did, the flat spots happen when you're trending, so that's good information, right? But you can't take action on that information at that point because it's overbought. You can't do anything to it when it's overbought. You can't see anything's going through it. You can't take it out of overbought. You can't do anything to it. So what I thought was if I moved the overbought and the oversold, if I changed that from being overbought or oversold to the middle, like that, then you can take action on it when it's in the middle. You see that? That is what I was doing. So that's what I really want to show you. Now, nobody has access to this yet but me. And I'm going to test it some more before you guys get it. But basically, if you're flat in the middle and you have a line that crosses through it, like this, if it crosses down through it, or if it crosses up through it, whatever the case may be, if it crosses up through it, you sell the open of the next bar. If it crosses down through it, you buy the open of the next bar. That's it. It's as simple as that. If it crosses up through it, you sell the open of the next bar. You sell that bar. Crossed up. Now you don't know it crossed up until this bar closed, so you sell the open of that bar. Okay. And it's right here. This one didn't work out so well, but you don't know that it crossed down until the bottom of this bar, and then you buy the open of that bar. Now you're going to have to use your risk management strategies for this. You're going to have to trail your stops like you normally would, like right here. It crossed down right here. You don't know until it got down to the bottom of that bar that it's crossed down. You buy the open of the next bar. Now this is a 7 range ES. If you buy the open of that bar, from here to here is 7 ticks. All right, that's 7 ticks from there to there. That's enough to get your stop to break even and take profit. Okay. Mark, mytradingiq.com. Okay. It's a different product. It's a lot more expensive, and it's a training program. Okay. So if the orange line goes with it, there's not a trade. Yeah, I mean, you can make this line whatever you want. Inside the optimization thing, there is only one line. There's two settings, two different settings. I have two of these going here, and one's just a different setting. They're the same line. There's only one line in there. But when I do complete this, it's going to go inside the TV trades range trigger. I'm not going to create I'm not going to create a separate indicator, because if I create a separate indicator, then I have to enable it for everybody individually, and that is just not something I want to do. But yeah, if they go together like this, then they'll do anything. Okay, I wanted to take advantage of the information that we were getting with the flat spots, because the flat spots means it's trending. Okay, or it's at the end of a trend. So I wanted to take advantage of that information, and I wanted to reposition it so we could act on it. That's what I was looking at, Gary. Okay, so I took it from the top and the bottom and I stuck it in the middle. So now when you get a crossover in the middle, you can act on it. All right. Now this, I'm still working on it. Right. This doesn't mean it's finalized just because I'm showing it to you right now. Because I had another thing that I was showing you a couple weeks ago where if the black area was on the same side, but that it wasn't working out. It wasn't working out so well. In the forward testing, in hindsight, it always looked great, always looked perfect, but everything does in hindsight. But the forward testing wasn't working out as well because there were a lot of times where it was that way. Yes, it is being recorded, and Mahmood, it will be it'll be emailed to you. Because you're in here, there's an email that automatically goes out in 2 hours after I shut this off. There's an email that automatically goes out and it'll have a link to it. It'll be in YouTube. Okay, so yes, you'll have all of this. Everybody that's in here, even and going forward, even if you register for one of these, if you register for it and you can't make it, it'll still be sent to you. You'll still get the email sent to you. That's got the it's got a link to the recording, and you can always go out to the YouTube channel because it's going to be in YouTube as well. So you can always go out to the YouTube channel and watch it there. Okay. Now we're only able to take one live trade so far. We're running out of time. We only have 9 minutes left. Do we have anything? Yes, we can take a trade. It's too late. It's already moved down. We could have taken a trade here on the Russell because the blue got up there by itself, but it's already done its job. Let's go here to the end of the ES and see if we have anything else there. We have to put the black line back on there and see. Nothing there. The NQ, it's too late. We could have taken a short here on the NQ and that would have worked out. It's too late to do that right now too. Fred, why not enter on break of overbought or oversold when it hits a blue background? That's what I was saying, Fred. You can do that. You can do that. That's what I was saying. When I was talking about, I don't know which one I was looking at, probably gold, I think is what I was looking at. You can do that. Fred's question was why not enter when it breaks the overbought or oversold when you have the right color background. And that's what I was saying. You can do that. Right? That's an option. That is one of the things that you can do. You can enter, like here, when it goes into the overbought, if you have a red background, you can sell the open to the next bar. Or you can wait till it comes out of the overbought if you want to be more conservative, because the question that I was answering at that point, Fred, was the more conservative trade. The more conservative trade would be to wait for it to come out of the overbought. The more aggressive trade is to get it when it goes into the overbought, to sell it when it goes into the overbought on a red background. All right, in this case right here, when you're doing it like this and using the background color, you're trading with the trend, you don't need to have the other line on there. You don't need to have this div area line. Okay, you don't need that because you're trading with the trend. You don't need divergence. If you're trading with divergence, then you're trading counter trend and trend. Now, let me say something about that. Okay, it's important that you understand this. We're running out of time, so I got to say it quick. When you're trading with the trend and counter trend, the market's moving down like this, right? This is your leg length down. From here to here is your leg length down. That's your trend trade. Let's say you get an entry right there. Great. You take some profit. You get out right here. Great. Down here is when the counter trend trade triggers, right? Right there. What do you expect out of the counter trend trade? Anybody? Anybody? Come on. I know some of you guys know the answer to this. Since my strategy deals with a few ticks, you see that NQ is easy. That's right, Gary. You expect it to get a 50% retracement, right? Possibly 50% retracement. So the thing that you need to do with that, you too, Daryl, great. So the thing that you need to do, Daryl, that's right too. I got to meet with you. Let me put you on my list. Hang on. Okay. The thing that you need to do with that is manage your risk, trail your stop accordingly, right? You're not expecting it to go up to the prior swing high. You're expecting it to go 50%. So when it gets to that 50% mark right there, it's probably going to hit some resistance. So you want to trail your stop pretty close and lock in profit. Okay? So the risk management is a little bit different. You get your stop to break even the same way. But after you get it to break even, once it gets up to this 50% mark, you're probably going to hit some resistance, and you want to lock in as much profit as you can. Okay? And then the next leg down should go this far, right? If I do this, if it does that, then the next leg down should go that far. So you should have another entry. Be right here, right? You should have another entry when it goes up like this. You should have another entry there. You have an entry here. You had an entry there. You take some profit. You have an entry here. You take some profit. You have an entry here, and that should go down to there. All right. So that one there, you can run the stop a little loose. This one right here, you got to run the stop tight. Okay. So down here with this, the thing I was so excited about and I wanted to tell you all about, you don't need the background color on this, right? Because you're going to be trading in all directions. You can just trade in the direction of the background color, okay? If I put it back on, you can just trade in the direction of the background color. Like if it's red like this, you know, you're only going to be looking for shorts. So every time it goes up, you sell when it's red. Every time it goes up, you sell. Every time it goes up, you sell. Every time it goes up, you sell. Every time it goes up, well, it crosses and it goes up, you sell. Okay, when you have a red background. That is a very simple trade setup to do, okay? Very, very simple trade setup to do. If it crosses the line in the middle and it goes up and you have a red background, you sell. All right, if it's blue and it crosses the red going down, you buy. It's as simple as that. I mean, that is, you get rid of the flat spots. When you do that, it gets rid of all the flat spots. There's no more flat spots anymore. Flat spots are in the middle, and you're able to take advantage of the flat spots now. So, I always tell you, I trade for a living, and I'm always trying to make it better and easier for me. And this is much better and much easier for me. And so it is for you guys too. It's a win-win. Win. If you if you guys subscribe and you do all that, everybody wins. Yeah, that's what I wanted to show you. Okay, were there any questions I didn't answer? Since my strategy deals with a few ticks, you see that NQ is an easy market to hit and to hit the stop loss. My stop loss on the NQ when I'm trading on a 50 range is a 60 tick stop. My target is a 75 tick stop. I do stop out on the NQ occasionally, but I usually make money on the NQ. As a matter of fact, if you go and look here, Mahmoud, so far this month the NQ has been really slow. It's usually way, way higher than all the other ones. But right now the ES is pretty close and the gold is pretty close to the NQ. But we're only 6 days in. But last month we made 17,000. This is with one contract last month. $17,810 on the NQ. 7,700 was the nearest, and that was on the ES. Then 4,400 in gold and 2,200 on the Russell. But that is with one contract. I actually made $178,000 on the NQ last month with 10 contracts on. So yeah, the NQ bounces around real fast, but the stop's not like 3 ticks either. I'm working on a 50 tick range, and so it does have room to move around. And I have a 60 tick stop with a 75 tick target. Okay, all that stuff is taken into consideration. What other purple arrow snipper conditions does that arrow appear at the start of a bar or at the close of a bar? All the arrows appear at the close of a bar. All right, Mark. Because it doesn't do anything intra-bar, all the arrows appear at the close of the bar. Okay. How do I get different charts? What do you mean different charts, Johnny? How do I get the different symbols? And Gary said he had 7 NQ trades today using my methods, and he has not had a single stop out. Excellent, Gary. All right. If you want to switch symbols, like to change the Russell to gold, there's a couple of different ways you can do it. Just click on it and type in GC, and it'll bring up this. All right. That is one way to do it. You can use GC1. That is going to give you the leading contract. Or just choose whatever contract it is. I think it's the April contract right now. All right. You just choose whatever contract it is. That's all you have to do. Okay, Johnny. Maybe an entry arrow on the chart itself might help to see the lines crossing. Oh, down here you mean. Yeah, I don't disagree with that, and I may do that in the future. Okay, I don't disagree with that. But this is all stuff I'm working on right now. Job. Okay, I'm still working. It's all in development. Well, it takes time, D. I mean, even to make a fraction, it takes time. I created all this stuff, so I have an idea what's going to happen next most of the time. Yeah, they do, Wayne. On both of those things. But, alright, guys, it's 4 o'clock. I don't like to run these things over, so what I want to do, if you haven't taken a trial, take a trial now. This stuff, I'm going to be putting this stuff out soon, probably this week. I think I'm going to be putting this stuff out. And all the other stuff is here already. All the other stuff that I've shown you is here already. So you can be in there making money, making trades every day. And if you guys, if you need anything, if you have questions, here, I'm going to type in my phone number down here for you. You can text me at that number. Okay, you can text me at that number. And I'll get back to you. That's why if you have a trade set up and you're not sure if it's a valid trade setup, you can take a picture of it and text it to me, and I'll tell you if it's a valid trade setup. If you have questions, you can do that. That's the easiest way to get in touch with me. All right, now I have a whole bunch of people, so I get back to everybody as quickly as I can. Like Daryl, I know you texted me a couple days ago, and I should get back to you yet, but I know I have to set up a special meeting with you. Um, but it's just getting better and better and better. You know, in the swing trade stuff and the NQ channel, the NQ channel is alive. I gotta, the stops are too close right now on the NQ channel. So, you know, join now and you'll be in before I decide to jack the prices up. I have too many people. But the NQ channel is here and it's alive. It's just the stops. I gotta work on the stops. The stops are too small. You know, like you have these little tiny stops all the time, and you have huge targets. So, thanks, D. Yeah, it's my grandmother, she had 15 great grandchildren. I think 15 great grandchildren and two great great grandchildren, and it's a lot of big family. They have a big family. La Jeunesse. It's funny, Jada was saying, I wish your last name was La Jeunesse, because my last name is Bork. So I have the one syllable French last name instead of the La Jeunesse. My mother's side, I have my father's side, obviously. All right. Well, that is it, guys. I'm going to wrap it up. Thank you all for coming. If you haven't taken the trial, get out there and take the trial. It's only $25 after the trial is over. And you click on one of these orange things. It'll bring it all the way down to the bottom for me. There it is. $25 a week after the 3-day trial, or $90 a month after the 3-day trial, or $97 a year after the 3-day trial. And discounts are actually bigger than that. The $25 a week is the most expensive one, but it's the cheapest way to get in. If you want to just get in there and try it out. You are welcome, Mark. All right. Thank you all for coming. I'm going to stop the recording first. Hopefully I'm still recording. Yes, I am. All right, so I'm going to stop the recording first.